The following presentation is an edited webinar version of our service, Active Trader Live. If you find it interesting and wish to be updated on new releases, please subscribe to our YouTube channel or join our community at Forex.Academy and receive all our services for free. Your like is also highly appreciated. Enjoy.
Hello and welcome to today's Active Traders Live webinar. My name is Richard and today is now Friday the 26th of April, 27th, I've just been told. So look, so sorry, these days are flying by so quickly. The 27th of April. So in this live webinar, we'll be looking for opportunities to trade during the US Open. So before we begin, if we can start, as we always do, with our disclaimer, please make sure you are aware of the risks involved in trading the financial markets. So hopefully you'll have an opportunity to read the disclaimer currently up on screen. Okay, so just a few pieces of housekeeping before we begin. Feel free to ask any questions at any point throughout. You can locate your chat box on the right-hand side of your screen. And as always, for our members, this live webinar is being recorded and will be made available into your members area once this webinar has actually concluded. And of course, we'll have our normal Q&A at the end. So without further ado, let me explain firstly the format in terms of what you can expect over the next hour or so, and that is that we're going to start with a review of yesterday's trades. So we're going to have a look at some of the markets we identified yesterday and really see how they performed, because it was a pretty turbulent trading day. We were able to benefit, or when I say benefit, I'll show you how the trades performed, but we basically broke even yesterday in the end. We had some explosive moves in one direction, and then once the press conferences concluded, a number of markets had turned around quite considerably off the back of dollar strength, and were really quite aggressive moves in the end in the opposite direction. So it was one of those very topsy-turvy, very choppy kind of trading days. So we'll go through yesterday's trades and benefit from the performance of those trades, good, bad, or indifferent. So, you know, if we made a loss, I'll explain the loss, and if we made a winner, then you know, obviously that's good news. So trading is not all about winning all the time. It's not possible to win on every trade. You know, losses are a fundamental part of trading, so they are to be restricted, obviously, wherever possible, but almost embraced. So if you think you can trade without taking a loss, then that is a remarkably difficult thing to achieve. So so losses are an inherent part of trading the markets. So we'll have a look at yesterday's trades. We'll review the potential market moving news, see what news events can impact some of the trades that we may get in over the course of the day. Then we're going to review the markets on longer time frames. So we'll have a quick quick look through the charts. We'll have a look at higher time frames, and we'll see what opportunities may exist. And that will allow us to select our trades to focus on for the session ahead. So we have a bit of a process that we look to follow, and then we just plan our trade and trade our plan if the opportunity presents itself. And that's quite apt, because yesterday was quite a good example of opportunities not presenting themselves in a fantastic way. So we can see what happened to price action, but really where we focus on entry and exit. So let's start with a review of yesterday's trades. So for this, we'll bring up our trading platform. So one of the first trades we were looking at, and if I draw your attention to this price point in here, the 21.56 on the daily time frame. Let me zoom in as far as I can. So you can see yesterday, the low of 2 days ago was just above the 21.56, and I want to draw your attention to the 21.56 now in a second when when we go down into the smaller term timeframes, and let's zoom in this chart so you can see clearly what is happening. So we do have a GDP figure actually out impacting the US dollar very shortly. So I'm going to try and fly through this. But what we did in yesterday's trade is we effectively identified a level just above here from a technical perspective, to capitalize on a bit of a pullback in this market to a level of support, which this was. And just purely from a consistency basis, we were anticipating the opportunity to push this higher, break new highs, and see if we got a push to the upside. We placed our stop loss beneath the low, and as you can see, we were in profit for a little bit, not very long, and then this market rolled over to the downside. And this shows the importance of trading with discipline, making sure that you don't take any significant losses. So this was only 11 pip stop loss that we were exposing in this market. So very comfortable with that price action. It proved to fail. So therefore, when you make decisions based on technicals like this and the setup fails, then what that means is you've taken a losing trade. You know, don't carry it forward necessarily into any subsequent trades. It's just simply a losing trade. And like I said, all traders take losing trades, so it's nothing to run away from. It's something to be embraced. But as long as you make sure that you mitigate that risk, because look what happened subsequently. If we didn't place a stop loss, we would be in an awful shape as the price has moved considerably lower. So, you know, we were able to practice really strong risk management with the trade. We tried to push the price higher, which is what it was looking like at the time. That completely failed. So then our attention started to shift below the 21.56 to actually pushing this price lower. And in actual fact, didn't really present us with any great opportunities for the remainder of the US session. So that was a bit of a shame. You could see how this market went into sideways price action for a long period of time. By the time the market started to kind of bounce back, it was getting late in the evening. So it no longer presented us an intraday opportunity to get into this market. And we certainly didn't get an opportunity to sell this unless we would have sold the structural failure. But what we want to avoid doing is flip-flopping. So go from a buy trade to get stopped out to literally switch that. That doesn't often end that well. So really we want nice structures to work off. And if the move occurs without the structure, then so be it. That's just part and parcel of trading the financial markets. And a market we were able to capitalize a decent trade on. At the time, we were able to book in some profit. Let me see, I think it was the dollar yen. So so what I'll do is let me remove this. So we were looking for an opportunity to buy, and we're able to capture a little break above. Sorry, excuse me, it wasn't the pound. So yeah, this was one of the trades we were looking to buy above this level, the 152, the 152.59. So we've had a complete rejection today as a result of the dovish views from the Bank of England with regards to interest rates, the slowing for the potential of the interest rates. So we've had a fundamental sort of shift which has weakened the pound considerably across the board, especially against the yen. So yesterday's price action, and just focus on the 152.59, and we'll just explain very briefly what is going on with that one. And this was the level. So again, this was like where we saw the initial break to the upside, and we saw this quite messy. If I can take this off and let's zoom in on this price action a little bit more. So we'll slide it across. So this is the price action that we were focusing on. So what we did was we didn't want to capture the actual initial break. We wanted to wait for the pullback. So we got the pullback and we're able to get in above the 152.59. And as you can see, prices started to do nothing. And we just got that little roll to the downside. So we placed our stop loss here and we took a small, I think it was about a 9 pip stop loss in that one as well. That was the pound yen, and the market which we were actually able to get a profitable trade off was the New Zealand dollar. It acted in a really nice fashion. If we look at yesterday's price action, let me zoom in a little bit more detail. Sorry, just bear with me a second. So we're talking about yesterday lunchtime. Sorry, excuse me. Sorry, it was the euro pound. Sorry, I normally have my my trade journal next to me, and unfortunately I arrived at my desk without it. So I always make note of all the trades. So we have the euro pound. Let me just bear with me 1 second, and I'll get the actual price details as well for this trade, which was a profitable trade. So just bear with me 1 second while I get this information for you. And yes, it was the euro pound. So I've explained the euro dollar and the pound yen. So it was the euro pound where we were absolutely able to benefit from the strengthening pound at the time. So we're looking for the price around the 87.25 level in the euro pound. So let me slide this back across. Oops, excuse me. I don't know why this isn't wanting to slide across for me. There we go. So we will look at this euro pound. So we were selling this bit of price action here, and I want to show you how nicely this market was conforming. Obviously, before we got the dreaded turnaround, and even there's a very interesting trade in there as well. So what I'm going to do is I'm going to show you, the price action that came before it, which was very negative, very much to the downside. I'll put a level in here, so you can see that we initially got the break of this market, and we got a really strong flush down. So when we started yesterday's, if I take this off, and we'll just slide it back. Let me get the area that I need. So this is what we were looking at yesterday when we arrived. So the market started to, we took a really nice move to the downside below a level of what was resistance on the way down now becomes, sorry, what was support on the way down now becomes resistance on the way up. So we wanted this market to trade roughly in and around the 87.26 level. But we didn't want to be buying it or selling it down at these lower levels, so we needed to wait for the pullback. This was the perfect support and resistance level to look to take a trade, and we had a little bit of resistance around this for those of you that were able to join us on this webinar, and we had a nice little turnaround. So this was a very small stop loss. I think it was about 6 or 7 pips, and it was a no-brainer trade to the downside, and we captured some profit in and around these lows. As you can see, the market dropped lower, but when you do hit your target for the trade, then you should be very happy with that. So ultimately yesterday we effectively broke even. I think we were down 4 pips over the course of the session. So all in all, a nothing day, let's say. considering we had a couple of markets, a few of the markets really turning around in a particularly kind of aggressive kind of manner. So so that's what we saw there in those 3 trades. And as you can see, this market then went in to a prolonged period of consolidation once we got that initial move. So we were able to capture the majority of that move, and then we went into a bit of a sideways sleepy market pattern, and then we've had the explosive move up today off the back of the GDP figures, the negative GDP figures coming out of the British pound. So, and we've seen the explosive move in the opposite direction. So actually you could have applied the same principle if you were looking at this level of support and resistance. You could say, right, well, as we're trading this range, if we get a break to the downside, we could sell below the 86.82, and if we get a break above the 87.06, we could constitute a good opportunity. Especially, this would have been very much a news-based trade, so this would have happened very quickly. And unless you had a pending order in this market, you wouldn't have really captured it. You would have had a better chance to maybe get into it around this kind of pullback, and you would have still captured a really nice move in that market. So I'm just going to take away some of these intraday levels, and we'll revert back to the daily time frame there. So we're getting a bit of a reversal off this level, which is what we'd always anticipate, the 86.91 to become a major level of support. As you can see, it's done in many times in the past, and it has done so again today and yesterday. So that's why we really like trading support and resistance. So so with that in mind, let's just touch upon the news. I would like to, that was just a little bit of an extended, let's say an extended overview impacting yesterday's trades, because it was such an interesting, from an educational perspective, it was a very it was a volatile move based on fundamentals from the ECB. So we're able to share with you our screen, and you were able to listen to Mario Draghi at his press conference as well. So hopefully you enjoyed yesterday's webinar. So this is the important figure here. As you can see, a 0.1, which is not good, obviously for GDP. What you want to avoid is 3 consecutive negative GDP numbers, because if that's the case, it means you're technically in recession. So obviously desperate to try and keep those levels up. That's why we've seen a little bit of let's say a very clearly defined breakdown in the potential strength for the British pound. And it was a significant miss as well. 0.2 is a significant miss. So, and that's what you're looking for. You're looking for significant variations. So, so that's the GDP figure, and as a result, we're able to see the pound sell off. So do bear that in mind very shortly. And we have just seen the release impacting the US dollar. So let's see what that figure was. So this is now a positive figure. So that's going to actually look to add more strength to the US dollar. So looking at these other figures, advanced GDP price index as well come in just slightly below, and there's a positive employment cost index figure as well. So this figure is, we would regard as a significant variation on the expected. So it's a nice 0.3 basis point jump on the 2% figure. So with that in mind, that's the only major news out for the remainder of the day. We do have Carney, but he is launching an education program, a BOE education program. So nothing of any significance really. We do have consumer sentiment coming out of the US at 3, so that has that can have a little bit of volatility associated with it. So so let's have a look at that advanced positive figure coming out of the US dollar literally in the last 8 minutes. So with that in mind, we'll go straight to the dollar index. Let's have a look at it on the 5-minute chart, and we'll see in the last 5 minutes we've had a nice little squeeze higher, but these markets have been pushing in this direction for quite some time. So maybe that sort of that level of percentage 2.3, maybe it all feeds into the same kind of upbeat view on the US dollar. And with the increasing yields in the US as well, we're very likely to see that increased capital flow. So therefore, it's looking still, from a sentiment perspective, it's all looking very, very positive indeed for the US dollar. We do say that with the complete knowledge that things can change remarkably quickly. But for now, things are still good. So now we've made a brand new high. And to just show you, the last time we were at these highs was around early November of last year. So now we're talking about 6 months ago. So that is of some significance in this market. And to let you know from a potential upside, we're reversing a little bit of a 14-month very bearish US dollar, and we're seeing a bit of sentiment push prices to the upside. There is other levels of excuse me, of support preventing prices from pushing lower as prices are pushing down. And now we're likely to see these same levels become levels of resistance as prices are pushing up here more recently. So we may experience a few bits of sort of a few pullbacks on the way to the upside. But if you keep getting those opportunities to perhaps buy the US dollar, maybe that should be a part of your trading plan just for the short term. So without a doubt, this is the dollar index is definitely something we should be looking at. So we'll add that to our watch list. So I shall add the US dollar. So looking across at the different time frames, we're seeing extension to the downside. So again, it's kind of a variation. It's a lot of the markets that we were discussing today in the European briefing, which was actually looking to buy the dollar, sell the euro dollar, and potentially sell the gold market. So all of that remains intact. So we'll add the euro dollar to our list of potential trades for the day. We definitely add the pound dollar. So when you trade currency markets, you want to identify strength versus weakness. And without doubt, the pound is definitely weak for the day, and the dollar is very strong for the day. So we're going to add that to the checklist. As you can see, we're just getting strength coming across the board. So so what you get is you get multiple potential opportunities. So we'll add the dollar yen to that market as well. And if I just continue to flick through the markets a little bit, you can see the picture here is not as great. So we're going to put that to the sideline. The same regarding the Aussie dollar. We expect it to continue lower. We expect it to continue lower, but it's just hesitating right now. So there's better opportunities in this market. Again, we expect this market to continue lower, so we can certainly look to add this market as well, the New Zealand dollar, to our checklist. So moving over to the euro pound, we kind of want to leave this now. Just we'll potentially coming into a little bit of resistance at these highs. So pound yen, we've got a confirmed break beneath this low, but what we're going to try and avoid doing now is trading 2-week currencies. So we'll certainly leave this one for now, even though we've now at this moment in time got a structural break to the downside. We've broken the ascending line. I can now remove this level here, and we're now, today's price action constitutes structural failure to the downside as well. So If we see some more weakness come into the pound, we're not overly surprised if this market continues lower, even if it's only short term. The problem is the yen. It's been strong yesterday and today. But we can see it's outperforming. Sorry, the dollar is outperforming the yen as well. So there's just better opportunities to work with. So looking at the indice picture again, I know we keep mentioning it, but we're going to just exercise a little bit of caution and back off some of these global equities for the short term. We're getting some mixed pictures across the board. So in those situations, we're going to just make sure that we don't necessarily overcommit capital to some of these markets. So we are seeing the British pound move to the downside. So we're getting the coordinated move to the upside in the FTSE markets. The DAX is looking like we're going to be breaking above these markets, but again, we're just going to monitor these. We do appreciate we are getting this movement in as a direct response to the pound dollar. So we could add this to our watch list, but we'd actually prefer to trade the actual pound dollar itself, certainly over the course of an intraday basis. Plus, a lot of that move, like we've seen in the pound, probably has already happened. So therefore, if you do get into the pound dollar to the downside, you've got to readjust your profit targets potentially. You might be more satisfied with just a smaller win rather than a big win, because you do want to take into account the price action which has come before it. Looking at the gold market, we're needing to see this market break beneath yesterday's low, and as you can see, it's reluctant to do so. If we do get that turnover to the downside, we'd expect prices to be drawn to the 1306. So it has been relatively correlated to the US dollar index, but as you can see, the dollar index is exploding higher, and this is a bullish spinning top candlestick now. So so it's not overly correlated as far as we're concerned today anyway. So just last few markets then, the crude oil, there's every expectation we're kind of holding on loosely to these kinds of levels up here, the late $60 levels. We could expect prices pushing up to 70 very, very easily. There's a good feeling and a strong feeling that prices in oil are going to push higher. So what we might do, of course, is get a little bit of a pullback. If we do, all that does is present us with actually a better opportunity to take it higher from a lower price. So we're going to keep looking at that market as things move. So really, what we're left with is a selection of dollar-related markets. So we've selected the dollar index to push higher. So we'll go through these one at a time. So we're not suggesting we're going to trade $5 related markets. We're going to actually, we know which markets we want to trade. So that is the dollar index, the euro dollar, the pound dollar, the dollar yen, and the New Zealand dollar. And now we're just looking for the type of setups that we like to trade. So now we want to see, right, are these markets ready for us to get into them now? Do we have to prepare? What sort of price action do we want to see before we get the opportunity to get into it? And now these are all the questions we're going to ask ourselves. So let's start with the dollar index, and we'll go into this market. We're understanding that that we've just had some good news out. And if I zoom in a little bit more detail, in fact, I've zoomed in a bit too far now. So on an intraday basis, we can identify this particular level as an intraday level of support, and also, as you can see, this level down here as well. So actually, we very nearly got kind of a pullback to that level. So we are virtually there. We're only a few pips away. So what I'm going to do is I'm going to take a buy trade at this level. So I'm actually going to take this trade now. And what I'm going to do is I'm going to bring the stop loss beneath this structural low. So the 6109, so we'll just bring it down to this level just in here. So what we have now is a buy order, is a market execution order in the dollar index, and we decided to pull this trigger now just because we had the explosive move to the upside. We've had a little bit of a pullback, and all we're simply doing is looking to buy the pullback. So let's see if we get extension to the upside in this market. And that was a trade call that is worth making at this time. So currently we've got approximately 10-11 pip stop loss on this trade. So from a risk management perspective, it's a pip exposure that we're very comfortable with. So that is that's the dollar index. So while we're in that trade, let's have a quick flick through the other markets and see, do we get other opportunities in these markets or not? So we'll have a look at the 5-minute chart. We'll zoom right down, and we can see if I draw a couple of levels, this is the ideal level to take a trade to the downside. So if you miss the flush to the downside and you get this little pullback, that's the area to look to take this to the downside once more from an intraday perspective. So we're talking about a few hours ago was the prime opportunity to take this market to the downside. And now looking at this market, we need a clearer picture, not overly. It's like we've made a new low, we're pulling back to this level. Now the picture is looking a little bit on the choppy side. You could argue that if we take these lows in here, that this was a little bit of a rejection of those levels. You can see we've exploded lower, and you can see the market turning around pretty quickly and saying, now's not the time for us to be breaking to the downside. So it's a bit of a tough market right now. So look, let's monitor these two areas and let's see how price behaves around there. And if something reveals itself, then we might look to get into it. The third market was is quite straightforward. We have to bear in mind that we've had a pretty significant 150, 160 pip move already in this market. So when you take the average range of the previous days, you're probably talking about something like 70, 80 pips potentially in the average range. We've kind of doubled that in today's price action, as you can see just visually. Obviously, there's indicators I can use to find out the exact amount, but you can see it visually. This is twice the size of certainly the previous 5 days, 6 days, and it's even larger than these 2 days in here. In fact, it's probably the largest move to the downside since potentially back in back in February. So it's comparable to that. In fact, it's even marginally a little bit bigger than that. So just a really big move today to the downside in the pound dollar. Will this market have any intention to move lower? Maybe, maybe not. Let's have a look at the 5-minute chart and see where we're at with this market. So we're getting a nice continued lovely break to the downside in this market. As you can see, just a break of this level here. First attempt didn't work. Second attempt, it just rolled, and it just kept rolling all the way down. So do we get that continuation? We're not so sure. So zooming in a little bit more detail, you can see how beautiful these levels can really stack up and can give you that confirmation that yes, you want to be trading this market to the downside. So and when we talk about confirmation as well, it's important to, from an educational perspective, do have a look at this area in here, because what we can see is we can see this market rolling to the downside, which is great. And then on a 5-minute chart, what we like to do is to wait for the close of the market and see if we get continuation. And you can see we close below that level, but we don't get continuation. So that's when you got to trade these levels of support and resistance, and just be clever. So you either let it explode and pull back, which sometimes you actually don't get that opportunity, but more often than not you do, or you wait for the market to close, and you see what happens next. And if you get follow through, then you can get into it. But you can clearly see we didn't get up follow through, we pushed to the upside. So actually you could argue now this level becomes even more important. And do you get that opportunity to sell it beneath the 39.6? And the answer is clearly yes. So it's clearly a level of support, preventing prices from pushing lower. And then when you get that breakthrough, hopefully that decision-making process is a little bit easier. So now we find ourselves looking at this market. If I zoom in a little bit more detail. So let's really focus on what's going on with this current price. And let's put a level in here, and let's put a level to the upside. And we do this knowing that we're already in the dollar index, so we will benefit from dollar strength. And let's see, does this market sort of bounce in between this level, and does it become a period of consolidation for a period, or do we get a break below the 37.50 or above the 37.72? So we only have a 22 pip range, and the 50 levels can be psychological levels as well. So if you get a confirmed break, you might want to take an opportunity to the downside in the pound dollar. So we'll monitor this very, very closely. So David, you're just asking, is it worth using a currency strength indicator to avoid trading weak pairs, or is it instinctive for established traders? I suppose the view we have on indicators are virtually the same. If it reinforces your let's say, if it assists you in having a clarity of thought, and if it supports your trade idea, and if it stacks up and if it makes sense, then an indicator will only assist you in giving you confidence. The problem is loads of people use lots of different indicators in a whole variety of different ways, and it's something that needs to make sense to the individual that's using them. So for example, I know many traders that use a number of indicators at the same time. They can read them very, very well. They can understand how to interpret them, and they use them very, very effectively. Now, those same set of indicators with another trader will probably confuse the decision-making process. And if that's the case, then indicators have a value. They can support your trade hypothesis or idea, but they don't necessarily assist you. And really use indicators in a way in which they can assist you to look for the type of setup you want to take, the type of trade you want to take. But specifically answering your question regarding a currency strength indicator, yes, it's a good way of trade selection. It's a good way of sieving out some of the weaker pairs. The problem with currency is you don't want to trade strength versus strength. You want to trade strength versus weakness. So actually, knowing what's strong and what's weak is a good way to assist you with trade selection. It's just as we always say to traders, you know, if whatever you're using, you know, if it pulls you back, if it doesn't really assist you to any great extent, then you know, maybe look at it in a bit more detail and try to establish whether it is something that you want to persist with. And the unfortunate thing about indicators is it's very much of a personal decision for you to make as a trader. So as you can see, you know, what we like to use is genuine levels of support and resistance, firstly, and we have I suppose an approach which is based in being consistent with our decision making around those levels. So if we identify support and resistance, we're happy to trade it. And occasionally we use another indicator. It could be a fib level, it could be an MA, it could be stochastic. It could be, I mean, there's so many, a MACD, whatever the case may be. And sometimes we use those indicators and it just goes, yeah, you know, that gives us another reason to take that trade. And really it's about building a catalog of reasons to trade. So to answer your question, David, to you know, to if you identify, I guess, a currency strength indicator that is quite effective, that seems to work, that seems to reduce your time in actually finding opportunities, and then you can allow your trading methodology to kick in and look for the setup and then try and be consistent. It's just about putting everything together. So yes, it can fit as a part of your overall kind of trading approach. So so I kind of hope I've answered your question. I think I have in my own head anyway. Yeah. So yeah, avoiding, you know, trading 2-week pairs is never really a good idea. So trying to find one, and sometimes you can find as well. Yeah, and that's absolutely it. You know, it's finding things that make sense to you as an individual trader. And I want to show you something else as well. Like, if I just get up my pen very, very briefly, just bear with me. So what we might have is currently we've got USD, which is very strong at the moment, and let's say we give it a 3-star, you know, for strength. But what we might find is we might see, like the yen, for example. Let me just put yen in here. We might see that that's only a 1-star in terms of strength. However, on the weakness side, let's say we have the New Zealand down here, and that seems to be very, very strong. Sorry, very, very weak. So let's give that a minus 3-star. So, and again, it's about your interpretation of a strength and weakness indicator. If you're saying to me that you can cut out the weaker trades or the trades that are perhaps not stronger, like trading the New Zealand dollar is probably a no-brainer. Probably, you know, a really easy to identify opportunity. But you might also find really good opportunities in the yen. It's mildly strong. It's not as strong as the US dollar, but the New Zealand is so weak. You're still getting really good trading opportunities. So it depends how strong is the strong currency and how weak is the weak currency, because you can often find these layered opportunities where you could actually you could be selling the New Zealand dollar, and you could also be selling the New Zealand yen. So it's really about your interpretation of your strength and weakness indicator, and looking for those opportunities as they unfold. So so yeah, hopefully that was useful. Yeah, and you've hit the nail on the head as well, David. You're absolutely right. It is all about confidence. You know, the more confident you feel in the trades that you take, of course, you're going to need to see return for that confidence. You're going to need to see some winning trades. Of course, you will. And that all goes back to your trading strategy. But certainly when you're starting out and you're learning how to trade these markets, if you find something that works, that fits, that makes sense, and it fits in with your overall approach to these markets and how you navigate them, then all good. So that's really, and I suppose a lot of this is very much more of a kind of a personal, you know, from my own experience as well. So hopefully you found it useful anyway. Okay, let me take that off. Yeah, and that's often the difficulty. One of the reasons why we like, I'm going to finish the review in a second, but look, this market is just moving sideways at the moment. We are getting this pullback in the euro dollar, and again, not really a fan of that kind of price action now. It's not great, and we got flushed out of the dollar index, did we? Let me see. Yes, we did. Yeah, we did. We just had a 10, 11 pip stop loss in this market, and we just got literally reversed off these highs. So, okay, we've taken a losing trade to begin with. It doesn't mean that the opportunity to take this market to the upside no longer exists. It absolutely does. We're obviously just feeling a bit of an extended pullback in a lot of these markets. Let me just have a quick look. So again, we're not getting any movement really. So the fourth market was the dollar yen. So we got a pretty choppy, especially during the Active Traders Live webinar. We got a very choppy session for the time that we were live. I suppose sometimes you get that, but it was funny enough, like as soon as the press conference finished, and it was around about 3 o'clock, and we finished at 2:30, about 3 o'clock, the markets just turned around and tanked in literally a straight line. So it was a shame we didn't have those trading conditions actually during the Active Traders Live, but that's the case sometimes. Sometimes you get some really good opportunities, really quick winners, and sometimes you don't. So you can clearly see what's going on with the dollar. So let's zoom out and let's get a little bit of a handle, and let's see. So we look for swing highs, we look for swing lows. You can see that this market's been supported at this price. There's obviously other levels below this level. So very, very quickly, we can kind of get a bit of a feel for how this market is moving. And we've failed to break above the 109.47. We're getting prices pulled back to the 109.25. So that's a significant pullback. So I don't know if it's news related. It should be very, very positive actually for the pound, for the dollar, but maybe a lot of that price action and potential good news with that news release is it has already been priced in. So we get the initial flush higher, and then we get the markets pulling back a little bit. The other thing to be aware of is we've had a very, very bullish week in the dollar index, and we are coming into the Friday session. Traders are going to start unwinding their positions. There's going to be a percentage that don't really want to hold them over the weekend. So all of that is a bit of profit taking. That's what we're probably seeing in this market, is a little bit of perhaps early profit taking on a Friday afternoon. It's not overly surprising. Friday afternoons can be difficult trading hours, let's say, unless you get really clearly sort of defined opportunities. There often can be few and far between. And the fifth market as well. So let's see how price behaves within this market. And I want to address something you just mentioned, I think, David, in a second. But yeah, the New Zealand, this is holding up now at these lows. So let's go into the 5-minute chart and see if does it give us any clearer opportunity for the remainder of this session. We're looking at a little bit of choppy price action now, really. So let's do a little bit of technical analysis. So again, we're just monitoring swing highs, swing lows. You just want to capture the areas where the market seems to be reacting around most in those markets. You could argue there's probably another level in there. And so we were aiming, not so long ago, half an hour ago, we were aiming to break below the 70.39. We've seen a pretty straight pullback off these lows. So hopefully you can see those, and we're continuing to pull back, and that's all this really is. But from a technical perspective, we've got a double bottom. So now this high in here becomes very, very important. So let's see, do we get a significant W formation? So this is from a technical analysis perspective, this would be a bit of a, if we get a structural failure around this level in here, it would constitute an opportunity to take this market to the upside. So let's see how this plays out. For that reason, I'm going to just place another level just at this high in here, and let's see how this price plays out. So these are the 5 markets that we were looking for. Will the dollar index take another leg higher? Not so sure now. You can see it pulling back a little bit. We've had, let's say 1, 2, 3, 4, 5, 6, 7. We've had 7 bullish days in the last 8. So I mean that's a significant move by anyone's imagination. We are running into a Friday afternoon, and what is very likely to be the case is we're now seeing some profit taking coming into this market. So are we likely to make new highs again? I think the price action over the last half an hour has suggested probably not. So that unfortunately is probably going to be the market conditions, certainly for the remainder of this Active Traders Live webinar. And I suppose that's just experience talking rather than I obviously don't know, but we will continue to monitor these for the duration of the session. But it's definitely looking like a bit of profit taking coming in across the board, which is very much understandable. If we break, let's put another level in here, and we'll work with the lowest of the low. If we break this level, it's game over to the upside, probably for the remainder of the day. So we're not too far away from it. We're only 5 pips away from sort of breaking lower. So that would just mean significant amount of profit taking. It doesn't necessarily mean we panic on a daily time frame, because next week we could find ourselves with another bullish week ahead of us. So it's just more from an intraday perspective, and knowing when to trade and when not to trade are kind of important skills. That really, we think experience is probably the major skill that you are it's kind of the most important thing that you kind of need to be able to develop is a feel for when you should be trading and when you shouldn't be trading. So yeah, just come back to your old question there, David. I know to trade weak versus strong, but I never know which are which. A very quick way, and you say about using an indicator, yeah, you can have something that can give you that information. But if you ask me, for example, what is strong and what is weak, I can tell you very, very quickly. Over the last couple of weeks, the dollar, as you can see, has been very strong. The pound has been very, very weak. Let's have a look across all these other markets as well. The euro has been weak. The yen has been weak. So and then you can go into, I suppose, the euro yen, for example, and see, right, well, this has been particularly choppy. This has been particularly horrible. So we could look at the pound yen and say, I mean, it doesn't make your decision making, these two examples don't make your decision making that great, but we're currently below last week's level. So if you Monday's trading prices. So if you ask me, just doing that very quick analysis, we can rate these markets over the course of the trading week, where the dollar is the strongest, the yen is marginally strong against the pound. So so really I can start to formulate that information pretty quickly, just looking at the majors, like the Canadian, for example. So, you know, the dollar's been infinitely strong against the Canadian dollar. So really what today's trading week has been telling us is trade the dollar, because it's by far the strongest currency, and all of the others have been weakening. But you can absolutely go in and see how the euro has been performing with the pound, and you can get a bit of an idea. The problem is, like, some of these, because they're weak currencies versus weak currencies, you're getting 4 days movement and then 1 day reversal. So I understand how difficult it certainly comes across as, you know, as. So knowing which ones to trade is absolutely it, and what you're talking about is trade selection. But you know, the whole week's trading has been about the US dollar, as you can see. Now, hindsight is a wonderful thing. It's identifying that early on. Now we've been in a few. Well, personally, have been in the US dollar for 2 weeks now. So currently building some real significant positions in the dollar index. Sorry, not the dollar index, in the dollar pairs, and continuing to build. Like, for example, the next one is we're getting a lot of these structural failures. Let me show you something that's quite interesting. Well, I hope you agree anyway. Look at this high back in what is it? In March, the beginning of March. So the high is the 90.88. We signify it with a blue line, which means it's a significant level of resistance. So we had that break 3 days ago. So that became a no-brainer opportunity to buy this market. Let me show you that same line in the pound, sorry, in the euro dollar, which was the same line as the 90.88 in the dollar index, is the 21.56. It's the same level. Now, because we trade daily time frames, we take different decisions regarding entry and exit. And a lot of this move occurred in a very, very short period of time. So what we're doing is we're trading below the 21.56. We're buying this market above the major level, which is the 90.88. The next level to go is this same level in here. It's the same date, it's the same low, except it's the 37.11. And as you can see, we're not at that level yet. So when you get a strong currency, they can move at different times. They can give you the explosive move. Like, this was one of the first ones back at the 107.90 level. It was, you know, and this was a week ago. That was one of the first ones to break. As you can see, that's 5 trading days ago. The dollar index, what is it, 3 trading days ago. The euro yesterday was the break. Maybe Monday, Tuesday of next week, we're going to get the break in the pound dollar. Let me take you even further back. 5, 6 days. No, in fact, 5 days ago, we had the break in the Aussie dollar. So you get this sort of you get this compliance. The break back was sort of 5 days ago, again, 71.80 level. So all of these levels, they all start stacking up and they all start falling one at another. So if you want to get, I suppose, the next breakout in one of these markets, and there's a little caveat behind the pound, because we've now got a double top in this market. So that's a very, very sort of bearish bit of price action, and we're unwinding this bullish move from 120 up to 143. That's a sizable move in less than a year, effectively, and we're getting an unwinding of that level now. However, as you can see, a break below the 37.10, you know, we've got nothing but air beneath that. So if you want the next major currency to break really strong structural levels, then the next one, hopefully in the pipeline, is the pound dollar. But many of the other ones have already occurred. So So yeah, hopefully you find that useful. And all it is just pure observation. Like there's, I suppose there's nothing more than that really. So let's have a look at these trades and see if there's any opportunities which exist. So we took an 11 pip loser pretty quickly in the dollar index. I suppose that's just part and parcel of trade in the financial markets, but maybe it's now just telling us today is not the day in which we should be trying to capitalize on some market moves. The daily time frames are telling us that some of these moves have already happened. Now we are getting a nice little bounce off this level here. It's very likely to be a little bit more of a range-bound trade. A range-bound trade than you know, a trade that's able to break new highs and things like that. We'll obviously wait and see. The last one is the New Zealand dollar. So let's revert back to the. So it's looking like a bit more strength is wanting to come back into the US dollar anyway. Okay, I'm just watching these quite closely. See, that's kind of so choppy. Yes, it is a clearly defined supportive level, but it has broken through once, twice, 3, 4, 5, 6, 7, 8, 9, 10, just even recently. So it breaks through that level quite a lot. So New Zealand dollar. You see now with these little pushes lower, what these markets can begin to create is now a structural failure, which is a complete reversal of what's currently happening. So if we get to break these lows, then it's definitely sort of game over for the dollar, certainly for the day. Sorry, bear with me a second. So the euro dollar next. Yeah, we're just getting this kind of price action here. So not overly surprised. However, getting a bit of short covering or a bit of profit taking in some of these markets now. So it's probably the way that this session is going to end. So I'm certainly not confident enough to have any major faith in a trade to the upside or to the downside for that matter. You see, there's some traders that will look at this price action and they'll look to buy above this level and look to capture some of that profit taking. You know, for those that look to close out their, you know, this major move, you know, all your intraday traders that maybe got in at this early move, capitalized on a big move to the downside, and they'll look to get in at these levels. It does, I mean, we're talking about a 25 pip stop loss. So I'm not going to decide to trade this market just because Yes, we are likely to get a 1-for-1, but are we likely to get much more than that? And would we be committing our capital for many, many hours? The likelihood is probably yes. Will it be choppy? Yes. Will it be up and down? Very, very likely. So maybe for all of those reasons, we might just finish our trading for the week. We've had some fantastic trades. And if you can make, this week now we've had 30, 50, 70, and a couple of 100 plus pip winners this week. And if you can offset that with 2 or 3, like yesterday we took a 4 pip loss, and today I think it's 11 pip. So if you can have a losing day or a day where you don't really get that many opportunity and you can end up with a 4 pip loss, then what you're doing is you're protecting your capital and you're waiting for better opportunities to come along where you can capture those 30, 40, 50 pip winners again. So that's the nature of trading these financial markets. So what I'm quite happy to do is open up the floor for any additional questions if you'd like. So we can leave these running and we can even revert back to them briefly before we finish. So yeah, we're just getting some short covering now coming in. And I suppose it's up to yourself whether you decide to trade this. It's quite straightforward. Buy it above well, anywhere around this level now, 37.72, but you'd be placing your stop loss below the 37.50 level, and maybe capture a pullback, maybe up to these levels and stuff. But just expect considerable amount of volatility in this market. So that just about concludes the Active Traders live webinar. So if you do have any questions, feel free to post them into your chat box. More often than not, Friday afternoons are not necessarily they don't necessarily provide us with incredible opportunities. So we tried to take a trade. We obviously got stopped out on it pretty quickly. Very, very small sort of pip exposure in the trade, so it was more speculative than anything. Bearing in mind we've already had a major move going into the US Open, so clearly bit of indecision, bit of profit taking kicking in now, and that's clearly what it feels like. So if you do have any questions, please do post them into your chat box. And if not, I'm going to wish you a very good weekend, and hopefully we'll see you all again next week. So is Friday a panic day as traders sell off? No, it's not a panic day. No, it's more of a case of like you have many traders that trade intraday that don't want to hold trades overnight. So if that's the case, you're going to be looking at these charts and thinking, right, when is the best time? So if I get up my chart, so let's say we sell the market at this level in here and we trade the market down and we think, yeah, fantastic, we've broken this new low, we're going to continue lower, and then we look at these lows and we see the pullback. Now we're like, oh, fantastic, we've got another break to the downside. So let's stay in this market now. There's no need to get out of it. We're doing really well. We get to this low, the market pulls back, we extend lower. Fantastic, we're still going to the downside. And then we're seeing the pullback. So we're seeing one pullback and we still think to ourselves, and this is what, I suppose the psychology behind trading, we see the pullback. So really, I want you to just focus on this area now while I take away a lot of these scribbles. So far, since what time is it? Since I guess the European Open this morning. Let me take this away and let me zoom in really closely. So this is the same level. So you were very happy till this point. And you're seeing, you can see that you've booked in loads of profit, from that price to that price. You're doing really well on the trade, and you see the pullback, and you're thinking, right, well, I need to break the 37.50 level, and let's see if we can do that. They're looking at this candlestick thinking, fantastic, we're going to break new low, I'm going to stay in this trade for as long as I need to stay in. And lo and behold, the market fails to make that new low. So now when we come back to this previous level and we start breaking above this, from a technical perspective, this is now a structural failure to the upside. So all of a sudden now, you know, all of these traders that have been in this trade driving prices lower, you got to ask yourself, what are they now thinking? Do they still want to be committing capital to this trade, because the market could literally bounce back all the way back up here? And do they want to go home, you know, having left, you know, 200 pips on the table on this trade? Normally, for consistently profitable traders, that's not their thinking. So really, they're looking to get out now, and that's why you're going to see the very likelihood that this market is going to bounce higher, unless, you know, a certain amount of those traders that are intraday think, because of the negative news out today, that they're happy to hold it over the weekend, in which case they won't be closing out their trades, they won't be profit taking. They do expect this price to continue lower, and they're happy to bear that risk. However, that's only for some traders, so do bear that in mind. Very likely to get a bit of profit taking coming in at the 37.75 level, and it's just because of that, really. So it's not so much panic, it's just logic, really. I guess it's just thinking how the market, the psychology behind the market, you know, what is it thinking? Who, you know, what would someone that is trading from a hedge fund and they happen to be selling the pound dollar, you know, on an intraday basis, you know, what would they do? They'd be happy up until this point down here. They'd be absolutely delighted with the trading performance. Now they're not so happy, but they're quite happy to take a 20 pip sort of softening of the market. They're not so happy to take a 200 pip softening. So this is just I suppose, the market psychology. So that just about concludes today's Active Traders Live. So all that's left for me to really do is to thank you very much for joining us. Do take care. Have a great weekend. We'll hopefully have some more great opportunities again next week. So from everyone here, do take care, and we'll speak soon. Bye for now.